Asian markets have taken a hit following a sharp sell-off on Wall Street that has rattled investor confidence. The German economy is showing a mix of optimism and caution with signs of recovery alongside lingering challenges. And we will explore Nigeria's turbulent crypto journey from a 2021 banking ban to new tax regulations that are aimed at boosting revenue and oversight. Hi there, my name's Neil Harvey here with the latest business and finance news for you on TRT World. Hi there, let's start with the markets across Asia. We're going to see a lot of red arrows in a moment because they had a rough day. Major indexes sliding as investors reacted to economic uncertainty, particularly on Wall Street. Japan's weaker than expected GDP growth, that didn't help things. Stocks in South Korea, China, Australia all took hits. But it wasn't all bad. Chinese EV maker Xpeng grabbed attention. A major stock jump after revealing ambitious plans for, and yes, you're going to hear me right, flying cars and industrial robots. What is going on? Let's take a look into the numbers and try and make some sense of this. Japan's Nikkei 225 and the broader Topix fell more than 1.5%. That marked a tough day for investors. Some of the biggest losers were Konica Minolta, down 7%, and Furukawa Electric, which dropped 6.5%. On top of that, Japan's GDP growth for the fourth quarter GDP came in at 2.2%, missing the expected 2.8%, a worrying sign for the economy. It wasn't just Japan though. South Korea's Kospi slid 1.26%. The Kosdaq following close behind, down 1.11%. Over in Hong Kong, the Hang Seng Index lost nearly 1%. Australia's S&P 200 fell 0.79, flipping from gains in the previous session, indicating uncertainty. In India, the Nifty 50, not so nifty, opened 0.4% lower, the BSE Sensex dipping 0.5%. Amid the market downturn, Chinese EV maker Xpeng made headlines, a 7.9% surge in stock price. The company is pushing forward bold plans. Its chairman has announced mass production of flying cars and industrial robots, not in 1,000 years, in 2026. Meanwhile, mainland China's CSI 300 dipped 0.54%. Taiwan's Taiex index also took a hit, down 1.84%, though that's still better than the more than 3% drop that it saw earlier in the session. Okay, let's bring in Farah Muradu, who's a senior market analyst at Equity Group and joins me live on the line from Dubai. A pleasure to have you on. First of all, Japan's weaker GDP growth than expected. I've heard Japan referred to as kind of like the litmus test. If things are bad in Japan, then you know you've got problems. How would you assess the next few months there?
I mean, it's definitely not a good surprise, given also this volatility, the uncertainty we have in the market. The main question now we need to ask, will it change the Bank of Japan's stance, the shift towards more hawkish stance? I believe so far it wouldn't. We might see a rate spike in May. Now, why do we care about that? We need to remember, okay, we have less domestic growth. Consumption also is not doing pretty well. It's not rebounding. But we're talking about an economy that is highly export-oriented. So I need to also check what's the future holding for international demand. And it doesn't look the best, but Japan might be benefiting from it, especially from this trade war that we see between US and some major global economies. Japan might raise as a winner. So the initial response is definitely a bit of pressure. I don't think it will affect the decision of Bank of Japan, so I'm expecting the yen to continue being supported. But there's this dilemma, like a stronger yen, it means more pressure on the export-oriented industries. So overall, there is uncertainty, volatility. I'm expecting it to remain, but it might be a winner Japan's economy, especially when it's related to the export-oriented industry, in case this trade war between US and different economies would support Japan as a better partner for the US, for example.
Farah, if we look at the Asian markets, they're all red, they're down across the board. Are we seeing the signs of an economic global downturn here based on fundamentals, or is this just panic because of Donald Trump's trade war?
I would say definitely both. But the real fear of a major global stagnation wave seems more realistic. We have too many fundamental signs, whether we're talking about the bond market, the series of data that came way less than expected, or at least it's not what we were expecting from, let's say, the US. We always expect better than expected data. So having a bit of this downtrend, there's nothing majorly screaming that we are moving towards an economic collapse, let's say, or a huge recession, but stagnation seems like a reality, especially with Donald Trump, another, I would say, premium that we have now in the market. I think the market needs to take a breath. Major markets reached all-time high, continued on retesting these all-time high. Given the data that we're seeing right now, a recovery or at least a rebound doesn't seem impossible. We need it. We need a bit of I would say, a rebound to the markets.
Xpeng have announced that they're going to be producing mass production of flying cars by 2026. Flying cars, that sounds to me about as likely as, well, a flying car. I mean, is this realistic in as soon as 2026?
I mean, I need to look more into these details. It just came out. The major thing I need to take into consideration, first, how applicable it is to have a flying car. Is there new rules that I need to consider before actually using this car? This is something major that I need to take into consideration. Now, even the financial support to the company, I think it needs time to materialize. So definitely on the long term, pushing boundaries, creating new technology, it would definitely support the company. This spike is just based on the news itself. I need to see more to see if it's sustainable, if it can be integrated into the markets fast enough. And it's just way beyond the capacity to be able to mass produce a flying car. There's too many other things I need to take into consideration. I believe that's why after this initial spike, we continue to see a bit of a rebound of prices on the stock.
Very shrewd, I think, Farah. Talk is cheap. You want to see evidence. I agree with that. Farah Marad is my guest, Senior Market Analyst at Equity Group. Thank you.
Thank you for having me.
Now, AI has emerged as a technology aiding industries from manufacturing to entertainment and media. In China, though, the government's also harnessing AI to enhance the efficiency of social care for its growing elderly population. This is part of the government's recent plans to increase investment into AI, announced at the second session of the National People's Congress. Emery Boz has more.
In China, the demand for elderly care services is steadily rising as the aging population continues to grow. Forecasts show the proportion of people aged 60 and over is climbing significantly. Predictions are that by 2080, 1 in 2 Chinese citizens will be elderly. So how is the government addressing this aging crisis? One answer lies in artificial intelligence.
We will accelerate the development and application of new technologies and products such as big data and artificial intelligence in the fields of social assistance, elderly care services, and services for the disabled.
The government is leveraging AI to meet demands in healthcare, using tools to enhance diagnostics and patient management. AI-powered robots may also assist with daily tasks like cooking and cleaning. An aging population also means China will have to battle against a shrinking labor force. By integrating AI to automate tasks in industries like manufacturing, services and agriculture, China aims to boost productivity. Leaders in China have recently announced they'll spend almost $138 billion in capital over 20 years to support more AI projects like this. Meanwhile, the economy is currently facing other serious challenges, such as a struggling real estate sector and rising youth unemployment. The government hopes AI investments will not only tackle these immediate issues, but also secure China's economic resilience for decades to come. Emre Boz, TRT World.
Okay, let's talk about Germany's economy now. It's sending mixed signals, offering both glimmers of hope and serious concern. It's become the only G7 nation to contract in 2 straight years. The country now standing at a crucial turning point. Germany's once strong export sector is showing signs of strain. The trade surplus dropped to $17 billion, signalling potential challenges ahead for the economy's global competitiveness. Exports, once the backbone of Germany's economy, that's taken a big hit, falling 2.5% instead of the expected 0.5% increase. Even more concerning, exports to the EU dropped by 4.2%, raising red flags about trade relationships with key European partners. Now, adding to those worries, industrial orders tumbled by 7%, a sharp decline suggesting slower production in months ahead. This questions the long-term strength of Germany's industrial sector. And amidst the challenges, there was one bright spot. Germany's industrial output rose 2.0% in January. That was better than the expected 1.5% increase. This unexpected growth provides a much-needed glimmer of hope for what seems to be a struggling economy. Now, Nigeria's relationship with cryptocurrency, let's just say it's been turbulent, and it was marked by shifting regulations that have created uncertainty for businesses and investors for years. Back in 2021, the Central Bank of Nigeria issued a controversial directive that prohibited banks from facilitating crypto transactions. But now the authorities are revising the regulations so that trading companies can start paying income tax. The move aimed at boosting government revenue, enhancing oversight and identifying offenders. Timothy Obiezu has more from Abuja.
Years ago, Rachel Benson worked as a ticketing officer, earning just $23 a month. Today, she's her own boss, running a charcoal export business while raising a family. She says it all started in 2020 when she sold a cryptocurrency she had acquired.
I bought Shiba of 80,000 that I sold at the rate of $5,000 within 24 hours. And I become mad. Crypto have changed my life today. Today I'm a founder. Today I have people I employ. Today I have people in my factory.
Now, Benson shares her success story at free blockchain classes for women, a program run by the non-profit First Triumph Development Foundation in partnership with blockchain educator Janet Katu.
For many here, the pursuit of financial freedom is the main reason for embracing cryptocurrencies.
Nigeria is Africa's largest cryptocurrency economy and ranks second globally in the Crypto Adoption Index, according to Chainalysis. Factors like a large unbanked population, inflation, and a search for financial security have fueled this rapid adoption. In 2021, only 49% of adults in sub-Saharan Africa had a bank account, according to the World Bank. But Nigerian authorities warn that without proper regulations, this swift adoption could pose serious risks to the economy.
The Commission is aware that fraudsters are now hiding under the ingenuity of cryptocurrency, to commit all manner of crimes.
Last month, Nigeria announced amendments to digital asset regulations, introducing taxes on cryptocurrency trading to boost government revenue and formalize the sector. Authorities have also filed a lawsuit against Binance, the world's largest cryptocurrency exchange, seeking $79.5 billion in economic damages and $2 billion in back taxes over a 2-year period.
If the Nigerian government had positioned itself, every activity that is happening on the blockchain around the country would have been happening on the Nigerian blockchain. But because why? A lot of billions, millions are being made in Nigeria today, and Nigeria is not getting 1% of it.
The government is also proposing a new law requiring crypto promoters to register locally by June this year. Yet, many here see this as a shift from previous restrictive policies to ones that recognize the growing role of digital assets in Nigeria's economy. Timothy Obiezu, TRT World, Abuja, Nigeria.
Okay, let's go live to Abuja and speak to Uche Igwe, who's a visiting fellow at the London School of Economics. So great to have you on, Uche. So let's talk about this rapid mass adoption by people in the country of cryptocurrency. The expression used in our report there was financial freedom, which I would say means getting rich. People want to get rich. Is this about people just wanting to be wealthy, or is it something more fundamental that actually a lot of them don't have bank accounts and they want to be plugged into the financial system somehow?
Well, I think that there are several reasons. First is that, as you know, Nigerians, about 103 million persons in Nigeria are internet users currently. Those there are about 70%, Nigeria's population, about 70% young people. About 207 million by the estimates of 2023 are connected to mobile phones. So there's a lot of opportunity in the country, and there's a lot of opportunity for cryptocurrency growth. But again, there is regulatory inconsistency, if you ask me, and that's part of the reasons, precipitating the situation at the moment. So yes, Nigeria, as you know, there's a lot of young people, there's a lot of people who are unemployed and poor, and cryptocurrency, in my view, is offering them opportunities.
In 2021, the Central Bank of Nigeria prohibited banks across the country from facilitating crypto transactions. They've changed that now, and it's clear why. They want the money, they want the tax revenue. But that original decision to ban transactions, I would suggest that comes from one of two places. One, either they thought that this was dangerous for people, that people could lose lots of money on this, or two, the banks themselves, the central bank itself was threatened fundamentally by the existence of cryptocurrency. Which do you think it was, or was it something else?
Well, I think it's a mixture of both. First is that there was limited understanding that cryptocurrency has come to stay. And there was a bit of, would I call it, inertia on the part of government agency. But I think at a point they had to do a U-turn because they understood that those who want to get involved in the crypto market were seeking alternative opportunities. They were going to nearby countries and they were finding their way. And as you know, 10.3% of Nigerians currently, by the statistics I just came across, own $56.7 billion worth of cryptocurrency assets. And that's huge. And I think that the Nigerian authorities have suddenly realized that rather than ban cryptocurrency, it's a time to regulate cryptocurrency so that at least they can get what is due to them in terms of tax revenue.
You've explained there the opportunities for people, and I understand why they're investing, but the Economic Financial Crimes Commission has noted that fraudsters are using exchanges for illicit purposes, and Binance, which seems to be popular in Nigeria, CZ, who was the CEO, had to step down. He served 4 months in prison, and Binance was found guilty of money laundering, facilitating criminal activity transactions in the United States. So isn't there a potential real risk for investors using a big exchange like Binance?
Yes, I think that what is important here is about regulation and not ban. There are a lot of complexities around the Binance transactions in Nigeria. As you know, one of the executives escaped from Nigerian prison, and there has been all kinds of accusations and counter-accusations of bribery on the part of the Nigerian authorities. So it's complex. But again, I think that rather than banning cryptocurrency use, it is important to regulate the use properly. There will be bad eggs, whether in the cryptocurrency sector or in the conventional, financial sectors. There will be bad eggs. So rather than ban the use of cryptocurrency, the Economic and Financial Crimes Commission rightfully must build capacity, working and coordinating with other agencies to ensure that the bad eggs who want to use cryptocurrency for money laundering and for fraudulent activities, are found, investigated, and prosecuted. But again, the country should realize that at this time when poverty is soaring and the economy is under a lot of challenge, this is a time to allow young people especially to get the opportunities offered for in the cryptocurrency arena.
Uche, great to speak to you. Uche Igwe, visiting fellow at the London School of Economics there.
Thank you.
Okay, let's look at other business stories around the world today, starting with China rolling out more than $40 billion to boost consumer spending. The government will double subsidies for trade-ins on items like smartphones and home appliances. The move aimed at lifting retail sales but avoiding direct cash handouts. Economists say more support may follow as China targets 5% GDP growth. China's aluminium companies are making more money as raw material costs fall. Alumina prices hit $795 per tonne last year, now dropping fast. More supplies coming could push prices even lower. That said, US tariffs on Chinese aluminium starts Wednesday, adding challenges for exporters. Tesla stock plunged 15% Monday, its biggest drop since September 2020, extending a 7-week losing streak. The longest continuous fall since its 2010 Nasdaq debut. After peaking in December, Tesla shares have fallen more than 50%, wiping out more than $800 billion in market value. The decline has continued since CEO Elon Musk took up his major role in Donald Trump's administration. Delta Airlines has lowered its outlook for the current quarter on Monday, citing weaker consumer and corporate confidence, along with lower domestic demand. The company now expects revenue growth of 3% to 4%. That's down, though, from a forecast of 7 to 9%. Following the news, Delta shares dropped more than 13% in after-hours trading. Now, as the world accelerates its transition to cleaner, more sustainable energy, Tanzania is joining the movement. The government's encouraging citizens, including commercial drivers, to adopt compressed natural gas. But the growing number of people making the switch has outpaced available infrastructure. That includes filling stations, prompting the Tanzanian government to intensify its efforts to address the challenge. Charles Combe reports from Dar es Salaam.
William Simeo has been waiting in this queue for nearly 2 hours, a challenge he faces whenever he needs to refuel.
With this queue, I may spend 1.5 or 2 hours. Honestly, the time spent here is a significant waste, because when you come to the filling station and spend 2 to 3 hours, that's the time you could have used to generate income on the road. Sometimes, when you're driving the rickshaw and the gas is almost running out, it becomes stressful.
The Tanzanian government began to encourage its citizens to adopt compressed natural gas or CNG-powered vehicles over a decade ago, but the initiative only gained traction in 2018. The affordability of CNG has attracted over 5,000 motorists, particularly commercial drivers.
Here in Dar es Salaam, where more CNG users are based, the demand for fuel is growing fast. But with only 4 filling stations, drivers spend hours in queues, affecting their work and daily lives. The government says plans are underway to expand this infrastructure and address the challenge.
A CNG mother station is now being built in Dar es Salaam by the Tanzania Petroleum Development Corporation, TPDC, which will supply gas to smaller stations around the country. And the Chinese company Sinoma is constructing it at a cost of $5.8 million.
This station will have the capacity to fill more than 1,200 cars a day, which will significantly help address the long queues that have been a challenge since the serving began. Its presence will greatly contribute to reducing waiting times for those relying on this service.
Although the number of motorists switching to CNG remains low, early adopters are paving the way for broad acceptance, with the government aiming for near total adoption by 2050.
The use of gas will help protect our environment. Protecting the environment means protecting the economy, because the environment supports economic activities such as food production and more.
Meanwhile, drivers like Simeo will have to wait a little longer before compressed natural gas becomes a daily reality for all Tanzanians. Charles Kombe, TRT World, Dar es Salaam, Tanzania.
The war in Sudan has engulfed the country in violence for nearly 2 years. The fighting has disrupted the education of millions of students, and with thousands of Sudanese fleeing to Libya, a group of teachers in Libya's Misrata have come up with a solution they believe to ensure their students' right to education. Our correspondent Rahul Radhakrishnan has details.
Rights groups have sounded the alarm over the dire humanitarian crisis in Sudan, as the war there enters its 2nd year. But this school for Sudanese refugees in Libya's Misrata has renewed hope for the displaced. More than 700 Sudanese students are enrolled here. It's a testament to the dedication of Sudanese teachers who initiated this program after the war shut schools at home.
This has been a great opportunity for students, as they now have a school where they can continue their education instead of losing more academic years. They have already lost 2 school years due to the war. Thankfully, the school has successfully provided them with education, and we hope it continues until peace is restored in Sudan, allowing students to return home and resume their education there.
UNICEF says nearly 19 million Sudanese children have had their studies interrupted due to the war. Violence has forced over 10,000 schools to shut across the country. But here, the school established with the support of the Libyan authorities and the UN offers a safe space for young students to continue their education.
Some students arrive without any official documents, no passports, no national ID, and no academic certificates. However, we managed to overcome these difficulties and enroll them in different grades, despite the extreme poverty evident on their faces, as they had endured harsh journeys across the desert and through Kufra. We will never forget the kindness of our Libyan brothers and sisters, both the government and the people.
But acts of goodwill often come with financial challenges. Lack of funding means the school is struggling to pay its rent and struggles to expand to accommodate more refugees. Nonetheless, students are grateful for the opportunities offered to them and their classmates.
Starting anything new is always difficult, and there are certainly challenges. The challenges are significant, but our teachers are making great sacrifice, dedicating their time despite the large number of students and the limited space. They even work double shifts every day.
Students here say that a second chance at education is vital as the war rages on. For them, it offers a ray of hope for a better future in exile. Rahul Radhakrishnan, TRT World.
And that wraps up your business news. If you've just joined us and you missed it all, I'll sum it up for you. Markets are down, way down. That's all. Thanks for watching.